Hello guys, welcome back to Crypto Space. We are again here and today's topic is going to be the mistakes that we all do as a beginner while doing futures. Some things that can help us create a good account, not have a lot of money that we waste trading futures in hope that we will make even more and not do revenge trading. And these are some topics that we will be covering. This is not an interface training or anything that you might think it is. So please stay when you want to know how to not make losses in futures by doing just simple mistakes that we all do in case of emotions. I'm not going to be covering any technical analysis topics here right now, not at the moment. I'm going to keep it as simple as it can be so that you are able to control your emotions and trade wisely. Let's go. You simply go to USDT perpetual. Uh, by perpetual, it simply means that it will be open forever. Not forever, as of course, like Binance closes down tomorrow, and you say this guy said, I'm not a financial advisor. I don't know anything that I'm sharing. Probably in a way that as you can't take it as a financial advice. This is just for educational purpose. This is just for telling you how you can do it on your end. Whatever you do, whatever losses you make or profits you make is completely your liability, your responsibility. Thank you. So starting with the video we selected, as we know, we can go here to select the coins. Now coming on the coins that we all always select, we all have a habit of finding the hot coins here. You can select the coins like USDM perpetual. It is covered with perpetual contracts that you can trade. You go to hot and you find the top coins and you think like let's long it. The problem is something that has went 90% up can either keep going on to 90% up or come back down 50%. In spot, you can still hold it, wait another day when it goes back to normal, and you can sell it. No problem. If you traded $100 for 100 ships, don't take it as a opinion that ship is going to $1. It is not right now. But if you traded $100 for 100 ship, no matter what happens tomorrow, you will still have 100 ships. But in futures, the case is different. You're not buying them. Exactly. You're not buying anything. You're just trading them. Your exchange owes you something. You take it on your account. You buy it. Like let's say you're longing it. You are simply buying 100 ship from exchange at $100, and you are saying I will sell it at this particular point. If you don't sell, the profit is not yours. I will help you with one cure that you can stick to always. It is not profit unless you book it. It is just a number on the screen. Let's say you have a one Bitcoin and it is at 57,624 dollars. Even if it goes to 100K, it is still one Bitcoin, not any profit in dollars. You might see it on screen, but it will be vanished the moment it goes down, or it will be much more the moment it goes up. So on your trades where you are trading future, always book profits. This is something that people miss out on. You have a trade open, book profits always. We are simply talking, not doing anything on the screen. I will be doing later. But if you have trades open, let's say you have ETH at 100x leverage and you are in 10% profit and you don't know where it is going, book profit. You don't want to book all the profit. You don't want to be left out that what if it keeps going up. Book half profit, book 50% profit, and let the rest of the position go on. I will be posting here my ETH long that I have taken so that you all can see. I can simply record the two screens at a time, but still I will be sharing it here and you can see my position. What I simply did was I kept booking profits at every level. You don't wait, you don't hope, you analyze. If you just simply analyze this chart and you took a long from here and you had a stop loss here, you had a take profit here, and you are very much convinced that the profit is going to be hit, all right, take profit here only. But if you don't know what you're doing, you are just taking signals from a Telegram group which says first TP here, second TP here, third TP here, fourth TP here, just know that they don't know what they are doing. They're simply giving a signal to get you addicted to it so that they can sell their premium to you. Have I done it? No. Coming back to this point, this is simple opposition. The next topic. Don't The next topic is simply choose a SL that you're going to keep. Don't keep shifting it to lower. Don't keep holding. Let's say if BTC goes to this level and hits stop loss and you get a loss here, cut your losses. Don't hold in position. Many new people, what they do is simply like they will hold this position. Let's let it load. Yeah, they will keep putting stop loss like this. They will be like, I won't cut losses, and after a while this will go here and they will still be holding. And if you think I'm lying, there are many people who still do it. Now it looks like a short position instead of long one, but we won't talk about that. If you had a stop loss here, let it stay here. What you might feel right now is that what if it hits my stop loss, goes from here to this stop loss, and then goes up like this? Then let it be. Let it be, even if it does it, because there are many cryptos in your whole life that will do it, and they won't always follow this. Sometimes they will follow this, sometimes they will follow this, or sometimes they will follow what, this and this. Now instead of waiting for losses to be cut here, you will be cutting loss here, or maybe you will be living in disbelief thinking, no, I will still hold. It is a 4% loss, decent loss on a normal spot trade. But let's now coming back to the next topic. This topic might be clear. You should have a stop loss always. Stop loss doesn't need to be on any specific point. You can find an invalidation point on your chart and put your stop loss there. But I'm not covering TA here. Covering just emotional mistakes that we all do in futures, so that every person who's starting new can understand it. Second is going to the leverage and isolated and cross. Cross simply means whatever you have here. All right, I don't have much money here, as you see. Let me transfer some from my main account to this. You will click here, fiat and spot, max, USD and futures. You transfer. All right, it's done now. This is how you transfer if you don't know. All right, you transfer. Now cross is simply means you are going to be using this whole money while opening a position. Even if you open 25% position, 50%, 74%, or 100%, this is the money you will be using to open this position. Now let's say you go to market. It will first covering the cross and isolated, then we will go to market. Cross simply means you will be using completely this position, and once it hits liquidation, all this money will be gone. At stop loss, only a percentile will be gone. Now let's say you had a leverage of just 10x. Now this point is a loss of 0.78%. So at 10x you will be cutting 7.8% loss. At take profit you will be taking 27% profit. The same goes for 100x leverage. At 100x your loss will be 78%. You will lose 78% of your capital at this point. I hope now you will understand why high leverage is not important. Not high leverage doesn't matter here. You will be losing everything here. You keep your stop loss here, your liquidation price will be above it. Why? Because you can't keep a trade open without your money. At 100% loss, your money will be gone, completely wiped off. That is where your liquidation will be. Somewhere here, somewhere at this point, at 556 to 76. So would you like to have your liquidation that close? No. In those cases, you will be using less leverage. The liquidation price is set in case when you will be using all your money. If you use half of it, then the rest of the amount will be used to cover the liquidation price, which will be wide in most cases, which will be somewhere here, you can say somewhere here. The same happens with 25%, it goes even lower. So there's no point in hitting position side, making it less here. Simply use isolated so that you don't end up wiping off your complete account at a time. Now what does it mean by isolated? By isolated, it simply means if you do a 50% of your portfolio, only this much of amount is at risk, only this much. If it hits SL here, the 97% loss, the 9.7% loss will be on this amount, not a total amount, the amount of the position that you are opening. This will give you the loss, and this will give you the profit of 27%. That is what will happen here. The liquidation price will be quite less as compared to cross, because only this much money will be in play here. Only this much money will determine where your position is going and how it is going on 100x, be it on 25x, or be it on 10x. The less leverage you take, the wider liquidation you will get. On 10x, Your liquidation will be somewhere at a 10% loss. When Bitcoin drops 10% almost, somewhere here will be your liquidation. You will be liquidated. Liquidated simply means this much of your position will be gone. If you are using 50%, 100%, all of it will be gone. This will be your liquidation at 10x. At 100x, your liquidation will be somewhat here. So this tells you how you need to use leverage and what is the importance of less leverage here. Use high leverage and your money will be gone as soon as you fill up your account. And I am pretty much sure many people seeing this have gone through it already. Use isolated, use less leverage. By less, I don't even mean 10x. Use 5x or 7x that I use. Depends upon you. Don't trade on hot coins that are going up, that are all going down. If something has gone down 90% from a point, trust me, it still has the potential of going 10% down more. And on futures, a 10% move will be important. See, this from here to here, it is just a move of 0.92%. But that 0.92% will give you a loss of 9% on your trade. 9% on your trade. Like on $100 you will lose $9. If you take trades like this for 10 days, your money will be gone, completely wiped off. I don't think you will want that. I don't think anybody wants that, but they still end up doing it. Have your leverage in check. Don't start with 10x, 100x. Start with 5, start with 3. When you see what is happening with my trades, always have a entry price. Never enter at market price. Market price simply means you say I want to open a position of 50% or 25% of my portfolio. You put here and it will open the trade on market price. Let's say it is at 57,382. I open right now. At that second it is at 57,450. Then the market price will trigger that price, 57,450, not the last price. Last price simply means you select a price where you want to buy BTC. 412, it changes, it goes lower, and then you do it. Always have a limit price. And in those scenarios, don't always consider, whatever the price here is, let's long here. Do some analysis. I'm not going to cover anything, but still do some analysis. Find what works on the chart. Where is a good entry? In BTC case, where will you be a good entry? Where will you be a decent entry? Where there is less chance of having a risk and more chances of reward. A risk means hitting the stop loss, reward means hitting the take profit. While opening, use a limit price. Put the limit price here. Let's say I want to long at 55,100. 25% BTC. I want to take profit at 59,200, and I want my stop loss at 4900, 49,000, and I only want to use isolated. I will simply buy and long. This is using 55%, $55. Here it is the fee level. After I long, this is how it goes, and it goes to open orders. Here, TP and SL. You can cancel it from here. Delete, and it will be cancelled and gone. This is how you do it. Last price always. Always find a limit price. Always find an entry. Exit. Exit means stop loss or take profit. Either you will be entering at a exit or a take profit. Third thing that not many people know about. Close your trades at an invalidation point. You see market is going into a south direction instead of north. Not a direction that you expected it to go in. Close the trade. Don't sit on it hoping that it will go up. Crossing your hands, praying to God won't help you in futures. It might for once help you in spot. You can become a holder and say after 5 years that yeah, I made it to the top. In futures, there are only a couple of people that make millions. For that, 1,000 people lose $1,000. You can choose which one you are going to be, not at least in your first month. If you are dreaming that in your first month only you are going to success, you're going to find success here, I'm sorry, you are up for a lot of trouble. I'm just being real. I'm just being blunt. I don't want to grow my YouTube on fake hopes that I'm going to give you 1,000x profit if you join my Telegram channel. But I can assure you on spot, I can help you. I can help you with basic things. I can help you. I can guide you. I can help you understand the emotions that you need to go through while trading. This is like a business. You put your profits as revenue. You take your losses as expenses. Understand? That is how you work. If you think of it as anything else, you are up for a long run. And the last most important thing is don't revenge trade. Don't trade to cover your losses. A loss is a loss. It's gone. It's gone. Whatever the capital is left, that is yours to play. There are unlimited opportunities in this market. Only limited capital. You might learn a lot after a year, but if you don't have capital, if you have wiped out already $1,000, you don't have them to trade anymore. No matter how much knowledgeable you are, no matter how much practice you have learned, there is no money to trade, no capital. Stick by this quote: unlimited market opportunities, limited capital. And you might understand a lot of things about the wrongs and rights of this market, where you need to enter a trade, where you don't need to enter a trade, and don't follow Telegram groups blindly. I will say again and again, there are only 10% genuine groups and 90% fake. I wanted to say 99%, but that will be just assumption because I have not been in all of the groups, and there are some people doing a lot of good things in Telegram for free. They don't sell premiums, they don't do anything, they just talk about sensible things, and I like them. I have been in a couple of groups. That is why I developed my own. You help people, you get something out of it, yep, of course. But then helping is the first thing, because sometimes we were also these noobs. We have had our share of losses. If I show you my leaderboard, this will simply show you losses. This will simply show you a lot of losses, but that is not the point. What you learn from it is. So this video is simply here to tell you how to avoid unnecessary losses. You don't trade on high leverage unless you have confirmed. You don't use cross unless you have $1,000 portfolio and you are only using 1% of position every trade. Because every trade there will be a mark also on the right which says how much of a risk it is. In desktop version it will be somewhere here. It will show the risk. It will show the risk of the trade like 23%, 1%. That risk means that how much of the portfolio size you will be losing if the trade goes south. I hope I am understanding the needs of you, and I'm being able to explain them wisely here. Otherwise, I will apologize if I'm not able to cover anything. That will be all from my side. Take care. See you soon. Goodbye. I wish you all a good day trading, make money, and if you're liking the content, if you saw it until here, please like, comment, give your views, share it with your friends, share it with someone who might benefit from this. Grow, help us grow together with us. Our Telegram link is in bio. It is free for everyone. There is no premium. You can join in, you can have a chat, you can learn from us, you can learn from me if you want to. We'll be posting new videos soon. If you have any suggestions, please write them in comments, tweet about us, or anything. If you want any charts to be made, any entries, write us in the Telegram group and we will have them made for you. We always catch the tip. I will be posting my Telegram link and you can verify it. We have had good percentile of growth in futures and also in spot, but then I've shared spot mostly. So that will be all. I will be going right now. We'll be covering other things later on, how these things work, how these interface works, because people find it typical tough to work with. But for now, all of this is done. Remember these points, these points, these points, and then these points, and you will be good to go. Let's go. Goodbye. Take care. Sorry for taking your time if it was more than what I shared. Goodbye again.